Welcome to SS2 Commerce. Today we study development banks in Nigeria, specialized financial institutions created by government to channel long-term finance into key sectors of the economy that commercial banks neglect. Development banks play a critical role in financing agriculture, industry, small businesses, housing, and export, areas essential for Nigeria's economic transformation. A development bank, also called a development finance institution, DFI, is a financial institution established by government, or with government participation, to provide long-term loans, equity finance, and technical assistance to sectors considered strategic for economic development but underserved by commercial banks. Why commercial banks do not serve these sectors? Long gestation period. Agricultural and industrial projects take years to generate returns. Commercial banks prefer short-term loans. High risk. New industries, small farms, and infrastructure projects carry risks commercial banks avoid. Lack of collateral. Small farmers and MSMEs cannot offer the collateral commercial banks require. Thin profit margins. Development lending is less profitable than consumer lending. Nigeria has several major development finance institutions. 1. Bank of Industry, BOI. Established, 2001, merging 3 existing institutions, NIDB, NBCI, NAFund. Mandate, provide long-term finance to manufacturing, agro-processing, and processing industries. Products, term loans, equity finance, technical assistance. Interest rates, lower than commercial banks, single-digit rates for priority sectors. Key programs, bottom of the pyramid, BOP, for microenterprises, Cottage Agro-Processing Fund. 2023, BOI has supported over 2 million MSMEs and created millions of jobs. 2. Federal Mortgage Bank of Nigeria, FMBN. Established, 1977, as Nigerian Building Society, converted to FMBN 1977. Mandate, develop and promote homeownership in Nigeria through long-term mortgage finance. Manages, National Housing Fund, NHF, 2.5% of salary contributed by formal sector workers. Products, estate developer loans, individual mortgage loans, cooperative housing loans. Challenge, most Nigerian housing demand is informal. FMBN primarily serves formal sector workers. 3. Bank of Agriculture, BOA. Established, 2000, renamed from Nigerian Agricultural Credit Bank. Mandate, provide credit to agricultural sector, crop production, livestock, fisheries, agroindustry. Products, short-term and medium-term agricultural loans, commodity loans. Interest rate, subsidized rates, historically 6 to 9%. Challenge, limited capital base, political interference, high default rates. 4. Nigerian Export-Import Bank, NECO. Established, 1991. Mandate, promote Nigerian non-oil exports by providing export credit, guarantees, and insurance. Products, export credit facility, export credit guarantee, foreign input facility. Target, exporters of manufactured goods, agricultural products, services. Goal, diversify Nigeria revenue away from oil dependence. 5. Infrastructure Bank, Nigeria Infrastructure Advisory Facility. Provides long-term finance for infrastructure, roads, bridges, power, water. Works alongside World Bank, AFDB, Islamic Development Bank on major infrastructure projects. 6. Development Bank of Nigeria, DBN. Established, 2017 by Nigerian government with support from World Bank, AFD, France, EIB, European Investment Bank, German KfW, AFDB. Mandate, address financing gap for MSMEs through wholesale lending to participating financial institutions, PFIs. Operation, lends to commercial banks and microfinance banks at concessional rates, they on-lend to MSMEs. Focus sectors, agriculture, manufacturing, healthcare, education. As of 2023, disbursed over 700 billion naira to over 250,000 MSMEs through 40+ PFIs. Development banks perform 6 key functions. 1. Long-term lending, provide loans with tenors of 5 to 25 years, much longer than commercial banks. 2. Equity investment, take ownership stakes in strategic companies. 3. Guarantee services, guarantee loans made by commercial banks to reduce default risk. 4. Technical assistance, provide business advisory, capacity building, market linkage. 5. Refinancing, refinance commercial bank loans to enable them to lend more. 6. Policy implementation, implement government economic policies, e.g. CBN Anchor Borrowers Program channel through BOA. Development banks source their funds from government equity, capital injection from federal government. International development institutions, World Bank, African Development Bank, AFDB, International Finance Corporation, IFC, European Investment Bank. Bond issuance in capital markets. Bilateral development agencies, German KfW, French AFD, USAID, DFID. Retained earnings from previous lending. Development banks in Nigeria face significant challenges. 1. Inadequate capitalization, BOA and BOI often lack sufficient capital to meet demand. 2. High loan default rates, agricultural borrowers frequently default due to crop failure, drought, pest attacks, and market price collapse. 3. Political interference, lending decisions sometimes influenced by politicians rather than commercial merit. 4. Capacity constraints, insufficient trained staff and digital systems. 5. Limited reach, most development bank branches are in state capitals, rural farmers have difficulty accessing services. 6. Overlap, multiple institutions with similar mandates create confusion and duplication. Key differences. On-screen comparison. Development banks, commercial banks. Government-owned or supported, privately owned, mostly. Long-term loans, 5 to 25 years, short-term loans, 1 to 3 years. Subsidized interest rates, market interest rates. Focus on strategic sectors, profit maximizing, serve all creditworthy clients. Do not take customer deposits, usually, take deposits from public. Development mandate, commercial mandate. Summary of development banks in Nigeria. Development banks, specialized government-backed institutions providing long-term finance to strategic sectors. Why needed? Commercial banks avoid long-term, high-risk, low-collateral lending. Major Nigerian development banks. BOI, Bank of Industry, Manufacturing and Agro-Processing. FMBN, Federal Mortgage Bank, Housing and Mortgages. BOA, Bank of Agriculture, Agricultural Credit. Nexim Bank, Export Promotion and Non-Oil Export Finance. DBN, Development Bank of Nigeria, 2017 MSME Wholesale Lending. Functions, long-term lending, equity, guarantees, technical assistance, policy implementation. Challenges, undercapitalization, defaults, political interference, limited reach.